Welcome to A Corporate Time with Tom and Dan. I'm Tom.
I am Dan. Samantha, our producer's here. Hello, Sam.
Hello.
So, Brian Zymel called me the other day.
What did he say?
Streamline Mortgage Solutions.
What'd you do?
And he was telling me about, he said, hey, I've noticed a trend in the market.
Okay. And you're the trendiest guy he knows.
Okay, well,
so, of course, he called you.
Because I like to have conversations with our clients about, what's going on with them and, what they need to market. But Brian is like, hey, I noticed this trend in the market with reverse mortgages. And immediately I was like, oh, reverse mortgages.
Yeah.
I heard those are bad.
Yeah, I have heard of those.
And
most things are reverse. Reverse this, reverse that. No, it's not good.
And I'm like, reverse mortgages, those are bad. And he's like, no, it's changed. And then
I've heard that before. I've changed. Take me back, baby.
He said it's different than what it's used to be. And I think a lot of BDMs and your listeners could actually benefit, especially their parents, from this. And so he started telling me more about it. I mean, this was weeks ago.
Okay.
And as I learned more about it, I was like, man, I bet a lot of people could benefit from this. But we need
now,
someone
this stuff is
explain.
Is scary to me because I'm
Tom,
not a math.
you're not good at explaining. So.
But let's be honest on the show. He handles the math. He handles the business side of things.
He crunches numbers.
I'm allergic to that sort of stuff. So I'm your guy. If you want to explain this to somebody, I'm little dumb Danny. You can explain it to me because this kind of stuff gives me anxiety. So, help me out, buddy.
So I invited Leo in, the COO of Streamline Mortgage Solutions, to come and help us understand reverse mortgages because as I started to learn about it,
it's not you, man. I'm relieved it's not you explaining it.
And then I started, I'm like, man, these things have a horrible reputation.
They do.
Everybody I've talked to, but they're like, oh, don't do that.
Reverse mortgages. What?
So how you doing, Leo?
I'm doing great. Thanks for having me, guys.
Oh, thanks for being here, man. We appreciate the time. And again, I'm glad to be in your hands, not his hands.
Yeah.
No offense.
And honestly, when me and Daniel have always said this, like we can never steer our listeners or BDMs in the wrong direction.
Well, it ruins us.
It would ruin our entire business. It'd ruin everything. And we have to always be honest with our listeners. Yep. And we've said this years ago when we started this company that we will never do what maybe we used to do in the radio world where you just read commercials because they're paying you to read them, and
much
that's a mandate.
like reverse mortgages, we've changed.
I like that.
Yeah. See what I did there?
So Leo,
take me back, baby.
Why do reverse mortgages have such a bad connotation? And everybody I mention it to, they're like, "Oh, don't do that."
Sure, absolutely. So we were skeptical too.
Yeah.
When we first heard about this product, and it's changed a lot, and I don't think people are aware of that. So Brian and I were like, we need to really dig in and learn a lot about this before we can bring it to our clients and their families and make sure that they trust us on that.
And it recently changed, right? Like talking a couple of years ago?
It's evolved a lot over the last 20 years or so, but in the last 5 years or so, there's been even more government regulation around it, and it's made it a product it's just very different than it has been in the past.
So, okay, first off, you have to be above 62, right?
You do.
Age?
Yeah.
Oh, my God, I got 3 years. Oh, my God, I'm coming. I'm coming for you, reverse.
And then also, Brian mentioned to me, which made a lot of sense, he's like, everybody sees how high inflation is now and how expensive everything is. Gas prices, rent,
food
groceries,
costs are going up.
Everything.
Yeah.
So, and Brian mentioned, he's like, a lot of senior citizens are on fixed incomes, and that fixed income has less buying power than it used to. So a lot of people are in trouble as far as now their purchasing power is less. Maybe their rent is more. Everything is more expensive. Gas and I understood this too because I went through this with my grandfather.
Yeah,
and
I remember when this was a kind of a mess for you.
Well, when my grandfather got to the point where he needed some people to come help him during the day.
I hope he can't hear this.
I know.
Seriously,
never tell him I need help. I'm like, I won't.
Even the ghost of his grandfather will punch your face flat.
He didn't need any help.
He did not need any help, but if he did need help, and if you had purchased help for him.
Yeah. He's holding a podium. Where'd you get that? Anyway, but so when he started having to have like nurses come in and help him during the day, and someone be with him at night, like Dude, it was crazy expensive. Like at first,
People
I hired a
People
company.
don't understand how expensive it is, man.
I was paying $900 a week. He was, but
Right.
and
it
that
can
was a
bankrupt
cheap.
a lot of people.
That was cheap.
Yeah.
That was me paying someone cash that not through
You
a
were
company.
asking for favors.
Yeah.
You were calling this guy. He was calling this guy for a
Yeah.
ride. This lady for a ride.
Yeah,
this
yeah.
poor nurse, and she's doing it independently off the books.
And luckily,
It was a mess.
he had some savings to pay for it. But I was like, well, if this goes on for another 2 years, like I started thinking, like, well, you should use the equity in his house, and my most important thing with him was he wanted to stay in his house.
Keeping him there. Yeah,
He didn't
that's
want to go
important.
to anywhere else. He didn't want to sell his house.
Well, do the math. You take the person of
you
age.
don't want to live with me, that's for sure.
Well, you take the person of age out of their home, right, and you make them unhoused,
Yeah.
or you put them in a facility of some point, and we all know that's the beginning of the end. I'll just say it.
Yeah,
we
yeah.
all know it. The minute you take them out of that, they lose their independence. It's not a good thing.
It makes them confused too.
Yeah, and who wants to be out of your home? That's your den, man. That's your spot.
So when I started thinking about it that way, and I was like, man, if someone they don't have the money to pay for their expenses anymore, I was like, use the equity in your house. The market is at all-time high, and that's kind of what this whole thing's about, right, Leo?
Absolutely. You mentioned inflation, and that's on everybody's mind right now.
Yeah.
But the one thing where the values have gone up, and it's a good thing, are everybody's homes. Home equity is at an all-time high right now.
Yeah.
And a lot of seniors own homes. And I don't think they realize that that's a financial asset that they can put to work for them right now to combat some of that inflation. And a reverse mortgage is potentially a great way for them to do that.
So let's talk about some of the myths too, because I did ask some of my friends. I'm like, "What have you heard about reverse mortgages? They'll take your house.
Yeah,
don't do it. They'll take your house."
Yeah,
I'm like,
I had
"Ooh,
heard you
I don't
sign
know."
up for reverse mortgage, and instantly you now own nothing. You've made a deal with the devil, and it is done. And you
sign your house over
signed
and
it in
never get
blood,
it back.
And you've done the worst thing. You might as well pack all your things and leave town. You've embarrassed your family. Worst decision. That's basically the way I was kind of told.
Yeah. So let's talk about that. You don't just sign over your house, right?
No, you don't. And Brian and I were talking about we need to become the reverse mortgage mythbusters. You guys have seen the show.
Yeah.
We're going to myth bust.
I love that show.
We're going to myth bust.
You guys need to get a big mouth Carrie on there. I'll reverse any mortgage you got if you got her on there.
We're gonna myth bust. So there's a lot of different things about it that people don't realize. One of the biggest things is that they're insured by the federal government. So it's called a home equity conversion mortgage, a HECM, and it's completely insured.
HECM.
Yeah, it's a HECM, and it's completely insured. So what does that mean? That means that your home can't go underwater when you get one of these loans. So what was happening in the past was people would owe more than their home is worth, and then you could potentially get into a bad situation. That can't happen anymore.
It's like going upside down on a car loan or something.
Oh,
you know?
man, I've done that.
Correct.
The dentists are known for our upside down car loans.
So you can't go upside down in your house.
No, the government's going to prevent that from happening on this product.
And then also, what about the myth of like, oh, they'll take your house? Like this is a way that that you'll eventually lose your house. And that's not true either. There's really no way to take your house unless you stop paying taxes or your insurance, or even how would they take your house?
That's really the only. You just got to pay your taxes and insurance, just like you do on any other mortgage you might have. If you pay your taxes and insurance, that insurance is the homeowner's insurance. The government insurance on this loan is going to protect you. It's called a non-recourse loan, which means as long as you're current on those two things, the lender won't be able to take ownership of your home. They can't come after your assets or your family's assets.
So just like any other mortgage, if you stop paying, like you got a mortgage, stop paying your taxes, then you can lose your house because your taxes, not nothing to do with the mortgage.
No, that's absolutely.
So, and then Brian told me that even after like all these changes, there's still like a third-party government counselor that has to sit down with you after.
Yeah, the part you were kind of telling me, and like explain a little bit about that. So, we're in the process of doing this. What would be the point of a third-party, person to kind of come in there and regulate things?
I actually think this is really great. Somebody hears, well, I have to go through counseling. That could be, well, why do I have to do that? It's actually for everybody's protection. It's a government approved. They all have to get approved. Counselor that you have to go independent from us, any lender that does a reverse mortgage. We have nothing to do with them. Can't talk to them. Don't talk to them. And you can go, and they have a very standard process they have to follow. They have to make sure you understand the reverse. that you're doing it for the right reasons, the pros and the cons. They'll walk you through everything. And I actually can't do a reverse unless you bring a certificate from that counseling session to me. And they get to see all the terms of whatever we've talked to you about as well. So there's a completely independent third party that has your back and gets the chance to kind of walk you through it.
So there are safeguards in place to kind of make sure that along the way, if you're ticking boxes and you get to one and you're like, you know what, maybe not right for me right now, then
absolutely.
And that's the way, again, you've heard us say this before, but that is the way that Streamline's always done business. In fact, that's how they did business with me. Before I was ever a client with Streamline, I was filed somewhere for almost an entire year that Brian couldn't do anything with me and my wife's, account with our home. And then eventually one day the team called and said, hey, remember us? Yeah, we had you on file and you're ready to go now. So again, they're not going to force you to do anything. It's
of course
they want to work with you, but then work with you forever, not work with you and put a bad taste in your mouth.
And when this is 100% true, if another mortgage, if we didn't have Streamline and another mortgage company came to us right now and said, hey, I want to advertise reverse mortgages on Tom and Dan, I'll be like, nope. Like I wouldn't even get into it or even understand it. I would just say no because I
don't have any
because and the reason why I'm telling everybody about this now and Leo's in here telling everybody is because Streamline's been with us for years, and we have never ever received a bad email, a bad review of Streamline. Like out of the hundreds of people of BDMs that Streamlines has worked with, we've never received one email from any BDM with a negative experience.
It makes me proud. Very happy about that.
And I 100% know that you and Brian and the whole Streamline team have the best interests of all of our listeners.
What you did there.
It's true.
You rascal.
Because I've told, like, even when I talked to a buddy of mine, just like to get his opinion, and his first reaction to reverse mortgage is like, oh, don't get into that.
Wary,
yeah. And it's just because this weird thing that, and it's probably why the government's now requiring counseling after, because it was a different program that people were getting taken advantage of, like, 20 years ago.
Well, they don't want to make the same mistakes that happened 20 years ago. It's kind of like the WWE is now offering, money management classes and psychological health care for wrestlers now. 20 years ago, they didn't offer that, and they made a lot of mistakes,
And it makes perfect sense why the government is come in and change this, because they want our aging population to stay in their houses and not have a problem where a bunch of old people can't afford to live in that.
No.
Now you have a society that, everybody over 70 can't afford to live in their house and is now displaced into their kid's house, putting a financial burden on them. And, let's end with this, because I talked to Brian about this, and Brian's like, let's talk about it because people think this way.
Okay.
So I thought, and I was like, well, maybe we shouldn't talk about it because it makes people seem greedy or like this seems bad, right? Because I thought, I was like, I bet you there's some people that are like, they don't want their parents to get a reverse mortgage because they want the inheritance of the house, and they don't want the equity being taken from the house.
Think about
when
that.
their parents die.
Boy, you really are the bad one.
That's
brilliant.
People think like this.
You're a genius.
People think like, oh, I'm not gonna have
They're out there,
yeah, because I want all the money when my parents die.
I want my parents to be happy, but I want to be happy too when they're dead.
Yeah.
Is that what you're getting?
It sounds horrible to talk about, but
maybe I'll cut my part out.
And Brian and Leo are like, let's talk about it, because it actually benefits people that even think that way. Because like, if your parents right now are financially struggling, right, or your grandparents, and rather than them spend all their savings and everything they have on to keep their payments up, they buy food, the gas, medical expenses, the home care, things like that.
Yeah, home care is so expensive.
Use how valuable their house is in the market now, because, and let's talk about that, Leo. Like right now, home values are higher than they've ever been, and they could fluctuate. And if you're looking at them now, like, might as well lock in that market value now and benefit off that high home market value, right?
Yep, you nailed it. It's the best time to lock it in. We're actually working with the parents of a BDM right now, and they had an income shock, right? Their monthly income went down, and they were trying to figure out what to do. So we spoke to them about a reverse mortgage, and what we're going to do is we're going to help them pay off their mortgage, so their monthly mortgage payment's going to go away.
Yeah.
And then they're going to be able to take out a line of credit, a lump sum against the equity that they've got, and their house is worth more today than it was last year, the year before. Home values have gone up over 40%. Wow. The average home went up $53,000 last year. That's more than the average income of most seniors. Their house made more money than they did. So it's just a really great asset. So what we're going to do is we're going to help the parents of that BDM, not nail down some fixed income for them and put them in a good financial position, and they're protected for all the reasons we talked about. And it just makes a lot of sense for them. And I think it'll make sense for a lot of other people too.
And then once they reverse mortgage now, they get locked in for that. Basically, your house is paying you monthly, and that's for life, right?
It is, yeah. There's a couple different ways you can do it. You can do it like a traditional line of credit where there's just a lump sum for you to tap into. Or the really exciting one that you mentioned is you can lock in a monthly payment, just like Social Security and pension. You can supplement that with a monthly payment, and that's guaranteed for as long as you live in the house. So even if your house value goes down, that payment can't go down, which is a really exciting thing.
Yeah,
so what is the age on this? How long before
62.
So when I turn 62,
yeah,
little jet ski Danny.
yeah. Well, also,
I'm gonna reverse.
Also,
what does Missy Elliott say? I'm gonna something reverse it and flip it.
Flip down, switch it, and reverse it.
I'm gonna do a reverse mortgage Missy Elliott theme song.
For me, I would like, because I'm a gambling man, I would reverse mortgage because I'm sure there's some sort of equation where like, well, this guy's only gonna live for this long,
and
it'll
beat
pay
it.
And then you beat it. Then every year
then
after I beat it, I win. Every year they keep paying me monthly, and I'm like, I outlived the equation, the actuary set up.
Are we helping Leo at all?
I don't know. but here's, listen, everybody knows me and Daniel don't know what we're saying, and
everybody does know that.
But here's who does: Leo and Brian and the Streamline Mortgage team, and all you have to do is go talk to them about all this.
Yeah,
and
see if it works.
It's free.
Yep.
And like Leo and we talked about, it's not for everybody,
it's not
right?
for everybody.
And that's what sitting down and talking to you guys and like bringing, like maybe your parents or grandparents or think like I did, where it's like, oh, reverse mortgages are horrible because they only know what they know 20 years ago.
Again, not to take it to a serious place or a sad place. This would have been perfect for my mom, who's the increasing cost of gas, the increasing cost of food and stuff like that. She was on a fixed income, but she had a ton of equity in that home, the custom house. So you remember Mom's house. And it would have been, and she wanted to stay there. It would have been very easy for her to do this and then use that. And it gives me a certain level of comfortability knowing that let's say that stipend, that amount that she would be getting per month wouldn't vary. Yep. Makes it easier for somebody like that. She was a planner to plan out and budget. Makes it a lot easier for her to live.
Oh, I thought of another thing that I think is a misconception is that you can't get out of the reverse mortgage once you.
I have heard that.
Yeah, so you can reverse mortgage now and then refinance into a traditional mortgage 2 years from now or 5 years from now, whenever. Yeah,
absolutely. You're never locked into it. You can refinance it. You can pay it off. That's a common misconception. Absolutely not true. You can take advantage of it for as long as you want. When you move or sell the home, you can pay it off. You can pay it off with cash. You can pay it off with a traditional refinance. Those are all options.
So it's not you're locked in forever. It's like once you reverse mortgage, you can't get out. You can also buy a house with a reverse mortgage, which I didn't realize.
Believe it or not, you can. You can buy a house with no payment. Think about that for a second. So this is cool for someone who wants to move closer to their kids and has a lot of equity in their current house, and they're going to sell that and make some money.
Yeah.
And then go get a condo by the grandkids.
A lot of people are doing that.
There's a ton of people doing that, coming to Florida.
That's actually
doing
sort of the Florida thing for older people is they find the area or condo, duplex, whatever near the younger, siblings or people, and then they just slide in there and then bank some cash.
You can take the proceeds. You got to have some equity, obviously. Bring it with you, but then you can buy that house with no monthly payment.
That's crazy.
It is.
And then actually the house is paying you.
So really what we're talking about here isn't necessarily an evil thing. It's just these are all options. It's just knowing whether or not it's going to be right for you. I guess anything can be bad if it's not right for you. I mean,
exactly. It's like a car lease. We talked about this. Like there was,
dude, leases were so good for me. See, people would always say my dad was one of those guys. Leasing a car.
What do you know about that too?
But leases, I didn't drive a lot of miles. You know, a lease is perfect for me. I keep my cars pristine and I don't drive a lot of miles. So when I turn it in, they're salivating. They're like, oh my God, it's a brand new car.
Not good for everybody, though, but good
if
for
you drive
you.
100,000 miles a year, which my dad did, of course he wouldn't lease a car. He'd destroy the lease. He'd be over by 75,000 miles.
So, Leo, what if anybody wants to find out more information, go sit down with someone at Streamline to discuss this, and you encourage people to go in with their parents or grandparents.
Yeah, just reach out.
They'll have the whole family come in so everybody understands. Right?
Absolutely. We would encourage that. I'd prefer for this conversation to be with families, everybody who could be involved in it, the kids, the parents, the grandparents. It's a great conversation to get everybody on the same page. We're happy to have that conversation at our office. We can jump on a quick call, whichever is most comfortable for folks these days. But that's the best way to figure this out. And like you said, it's not for everybody, but it is great for a lot of people. Awesome. And I think we'd love to have conversations with folks to see if it's right for them.
Thanks, Leo. I appreciate you coming in.
Appreciate the time.
Thank you, guys. I really appreciate it.
You can go to streamlineflorida.com for all information, and we'll be right back with more Corporate Time.